Welcome to Reality Podcast video version with a repeat guest many times, Tony Jarrett. Tony, welcome.
Thank you for having me. Always a pleasure to join you.
Well, we're excited to be in a studio for the first time. I want you to take a notice of the backdrop. I happened to write down two of the books, Tony, on the bookshelf. One, Built to Last, and the other one is Science of Scaling, which we have talked about.
Yeah.
But what I want to start off today, we're going to talk about the market. We're going to talk about inventory. We're going to talk about interest rates, average sale price. We're going to talk about everything. We're going to educate a little bit of background of Q1, and we're going to look into Q2. But I think what's really important, and you and I talked a little bit earlier, Tony, 8 months ago, big announcement here in the Carolinas called brand unification.
Right.
Alan Tate, Beverly-Hanks became Howard Hanna. And it has been a great 8 months. And one of the things that we have focused on since then is that we are built different. So I thought we would kick this off, let you and I share a little bit about why we think we are built different, particularly in today's market. What do you say?
Well, I think the unification has been really good for us. It's very interesting to me that for the last we're going on 70 years next year, that the independent companies in the marketplaces tend to disappear, quite frankly. And we're seeing a lot more what I'd call stock market driven, Main Street versus Wall Street, if you will. And now we have suddenly become the outlier. We're in the top 10 in the United States for real estate sales, listings, production, essential services, mortgage, title, insurance. And we're the only one in the top 10 that's independently owned and family owned. And we both came from family businesses, so it's been part of our DNA, part of our culture, and I think that's really sets us apart, especially for our clients who love to work with a family-owned independent company.
I love it. And, family ownership is one thing, family operated is another, and I think the thing we continue to be most proud of is our culture is family-based.
Right.
And it's about our people, and it's about, how we act and interact with one another, and we've been able to embrace the incredible culture of Howard Hanna, with the incredible cultures built over 70 years with Alan Tate and 46 years with Beverly-Hanks. And so it's been really a great transition for us. And I think the other reason we're built different, and one of the greatest articles that I read over and over again is North Carolina attracts the most people from outside of North Carolina. This past year, 85,000 people. Now, this isn't companies relocated. These are people waking up, living somewhere else, saying, you know what? I want to live in the Carolinas. And 42% come from markets where Howard Hanna is number one.
How about that?
So in our 15 states, and then the only other piece of built different that I want to piggyback off of Tony is Tony talked about number one, the only one of the top 10 independent family owned, also on a per agent basis.
Yeah.
The most productive.
Yeah.
And I think that when we think about what the consumer deserves today, buyer or seller, full-time, professional, highly productive, highly educated, highly informed real estate, as we call them, trusted advisor. So I think we're built different.
That's
I know
right.
You do too.
I do. The quality of the people sets us apart for sure. Proud of our team.
Yeah, excellent. Good. Let's get to the market.
All right.
DJ, I'm going to throw it over to you. Let's talk about the one thing that is all over the news. Inventory is up.
Yeah.
Not for the first time in a year, but it continues to climb. Tell us about inventory.
So inventory is across the board. Now, we always like to say real estate stats are hyper local, but we're going to give you some trends across the Carolinas and Georgia. I will tell you, in every market that we serve, inventory is up. So the active for sale signs, as we see them out there, are growing, and they're growing in double-digit percentages. Now, they range. I saw anywhere from a low of about 12% up to a high of 41%. But the pace of for sale signs has increased. Now, on an average, we're probably talking somewhere between 15 to 20% up year over year. And this is really after the first quarter of this year. The pace last year, a little stronger, but we have that season called winter. We had a lot of snow, a lot of ice into February. March was a really good month for sale signs. I think we're going to see this trend continue of more for sale signs coming to the market.
I think that, one of the things our chief financial officer, Eric Heinschel, says is behind every number is another number or two.
That's right.
In order to give you a proper perspective. So the other stat you talk about all the time relationally to inventory is month supply of inventory.
Right.
And so let's just give an update, because inventory up 10 or 20% to some people means one thing.
That's
and
right.
we're going to talk about what it does mean.
Yep.
But also month supply of inventory is also known as absorption.
Absorption,
and,
that's right.
And there's a metric out there at 6 months which really defines a seller's market goes to a buyer's market. Tell us where month supply of inventory lands in the Carolinas, Tony.
Well, and another definition of month supply of inventory is if we didn't put another house on the market today at this current sales pace, when would we run out of inventory? Typically 4 to 6 months is considered very healthy, very balanced market, and that's a good, healthy amount of listings to sales. We've been running that 2 to 3 months. Well, for the first time in every region we're in, we're at 3 or more now, and we're actually tiptoeing into 4 in certain markets. But we're in that 3 to 4 range. Now, if we go into our mountain regions, our second home markets, they're more that 5 to 6 months that we're starting to see on average. Still very healthy, but we definitely have seen it shift, and we're seeing, and what does month supply inventory mean for most people? For sellers, it means more competition. It means you really need to think about your offers, what you're offering, your price, your condition. For buyers, maybe a little more time, a little more options to shop, but when you do find the right one, you need to move. It's fascinating to me, even though we talk about this as a general rule, you go local, we're seeing in many of our markets that 3 to 350,000, if it's priced right, if it's conditioned right, it's not sitting on the market, and it's in multiple offers. All we talked about was multiple offers 3 or 4 years ago, and then it kind of calmed down. Well, there are certain pockets that you're going to see it. So talk to your Howard Hanna, Allen Tate, Howard Hanna, Beverly-Hanks agent about the local market, because some of this monthly supply of inventory, certain price points, certain neighborhoods, it may not be what I'm saying, but on an average, really healthy, anywhere from 3 to 5 months roughly.
And so think about this. Tony talked about hyper local. I'm going to double down. The market today is hyper local.
Yeah.
And why I say that, one of the things we're going to have a little fun on later, which we did a couple months ago, was fact or fiction. The media is not necessarily our friend. The media creates a headline to instill fear, not necessarily instill an education.
Yeah.
And I just read this morning, and I'm going to keep the source in the witness protection program, that there are 600,000 more buyers than sellers across the country.
Yeah.
Well, there are probably 10 or 15 states that are way different than 3 to 4 months, that are probably 6 to 10 months.
Right.
So I would say to us here in the Carolinas, as Tony said, a little more normal. I'd say that the market has definitely reset from where it was. We think about month supply of inventory. When it was crazy, it was like 0.9 months.
Yeah.
And now
2 weeks.
Yeah, and if we didn't get an offer in the first 3 days, the seller was concerned that the agent wasn't doing a great job.
Right.
I also think the other stat that's really critical is keeping an eye on the percentage of listings that are selling at or above the original listing price. I think last year 21% sold for over the asking price. Now, it doesn't speak to what might have happened to the other 79%.
That's right.
Because
that's right.
I do think we have to pay attention to that. Priced right, right condition. Great condition, hyper local, you can extend the price offering.
That's right.
But you got to do it with education and knowledge and support of your trusted advisor.
But the trend that we're seeing across the board is month supply of inventory continues to slowly, and I emphasize the word slowly, increase. And you think about why. Well, we get stuck on the pace of listings, but let's talk about the pace of buyers, the sales. It's healthy too, but it's single digit in most of our markets where listings are growing at double digit. And so they're both positive, but it's really 2 to 1. And so when you go at that pace, again, I can't stress enough, buyers have a little more options than they did a couple years ago, and they're taking their time shopping, but it's growing that inventory supply, and we're seeing that roll into days on market, which I know we'll talk about.
Yeah, so before we roll on that, I want to talk to, Tony talked about the buyers, and, people ask us all the time, what advice do we give buyers? And the number one thing that we recommend every buyer, sit down with your Howard Hanna mortgage loan officer, get pre-approved,
Yep.
understand some of the special mortgage programs, which we'll go into later, that can actually give you the ability to be a cash buyer if you get caught up in a competitive landscape. So I think we always have to remember, be the most prepared buyer, even though, Tony, maybe I can take a little longer than I had to before when I was forced to, and maybe I can be more patient, but when I am ready,
Gotta go.
be ready.
That's right.
Because at the end of the day, if it is priced right, right condition, right neighborhood, there's going to be a couple of you interested in that property, so be best prepared. Let's switch to days on the market. Another number that's going up. Again,
slowly.
Let's keep it relative to some other markets that you and I have experienced. So tell us about days on the market.
Well, days on market, and it's interesting, there's two markets. So the first market is days on market means it has a successful sale, a contract that triggered the days on market. Across the board, we're really talking about 2 months now. It's slowly gone up from about 45 days to about 62 days, and most of the markets, from the Triangle, the Triad, to Charlotte, it's really 2 months. When we get in the mountains and second home markets, we're starting to get more towards 90 days. Again, very healthy number, but that's when you price it right, condition it right, and it moves in those first 2 months. Now, let me tell you about the second market. The second market is really aggressive market. I believe I can sell it for this or sell it for that. That is almost double the average. So if it takes me 60 days to get a contract and I miss the mark, I miss the market, it's about 120 days. And that number and that widening gap between those two markets is getting bigger and bigger and bigger. It's like two real estate markets. And you think about it for your buyers out there who you talked about being pre-qualified, being ready to go. Well, as they start shopping, they know the market and they know which houses are right and which houses are wrong. And I'm worried about some of these sellers who feel strongly that their price is this, but they're losing money by sitting on the market longer and longer because the buyers in that second market are thinking, what's wrong with this house? Well, let's offer less because it's been sitting there. The seller's desperate. Most of these sellers are not desperate, but the bottom line is that the terms that we're getting are not good. So it's fascinating to see how this gap is widening.
And I think the other component of price and condition is an aggressive campaign for exposure.
Yeah.
And one of the things that we believe is the more things change, the more things stay the same. And we just came off, Tony, our big open house weekend. And now open houses have been time tested, certainly over my career, your career, and anyone watching or listening's career. And the stories we received just from this past weekend that talk about the number of people coming through the home, the number of neighbors coming through the home. I always say neighbors become customers. The number of contracts. I think one of our regional vice presidents, Brian Cagle, from the Asheville Mountain region, identified 6 contracts.
Right.
And so I think that, the recommendation that we make, certainly to the consumer, but clearly to our trusted advisor, is sometimes you have to go back to what has always worked.
Yeah.
Open houses, making sure we maximize the exposure of that property, particularly in the beginning, when it's fresh and it's new and it's crisp.
That's right.
So I'm going to go a little out of order. We talked about fact or fiction, perception, reality. Tony and I had a big time, it feels like 3 months ago, it was probably 6 months ago, where we took a series of newspaper articles, fact or fiction. So I found this one out, and I think it's really relevant. Is holding out for a housing crash, which isn't going to happen, hurt your finances? What every buyer should know. So think about what that headline says. Mm-hmm. It makes the assumption that a housing crash is going to happen.
Yeah.
And you and I have talked many times on this exact podcast.
Yeah.
Again, this one's great because it's video. But we talked about the financial crisis we experienced, driven by a housing market in 2008 to 2012, looks completely different.
Yeah.
Completely different.
Yeah.
And so if I'm a consumer and I read this article, I draw to the fact that somebody is suggesting that a housing crash is coming.
Right.
And it's not.
No.
An adjustment, a balance, which you've used in the past.
Yeah.
Now, I think I read this a little differently. And that is, why is waiting possibly costing me financial upside? I prefer that headline. Let's talk about the cost of waiting.
Well, the cost of waiting right now, so let's talk about the optics of that headline. I will tell you that price appreciation across the Carolinas is still very healthy, but it's slowed down a little bit. We're looking at probably anywhere from 1 to 3% price appreciation in the last 12 months. Not a crash, and it's not negative. It's not negative 1 to 3, it's positive. So there's no depreciation happening. What is happening, one of the leading indicators, is price reductions. We're seeing anywhere from 30 to 40% of the houses out there on the market miss the mark, reduced, not just once, but maybe 2 or 3 times. And buyers are seeing that, and they're going, it's overpriced, it's a price, and then you see the media saying it's a price crash. No, they just went above the mark to begin with, and they're coming back to the market. The market is setting these prices, and it's still healthy price appreciation. If you even bought at 1% price appreciation and kept it the next 10 years, your asset is going to work. And so there's never a bad time in waiting on the sideline to buy something because you think the prices are going to crash. Let me give you the stats. The last 84 years, Gary, how many price depreciations, or I'm going to use the media, I'm going to use that headline, price crashes have we had? 7 out of, we're almost talking about a century. Real estate is one of the safest financial investments you can make in your lifetime, especially if you can buy 2 or 3 times over your lifetime as generational. As you grow your family, as your family downsizes, you keep moving, that asset is pretty safe. And when that's happened, it's been some kind of war, World War I, World War II, it's been some kind of great recession that you alluded to a minute ago, 08 or 09, that's a once-in-a-lifetime thing. It's really safe. 7 out of 84 years is incredible. I'd put my money in that all day long.
Right. I'm going to piggyback on 2 things. And we've talked about this every time we do our quarterly update. And so our chief marketing officer discusses what she calls the rule of 7, which means we have to sometimes, as adult learners, hear things more than once. And so when we think about price appreciation, what we're thinking about is my price of my home went from $300,000 to $309,000. It went up 3%.
Yeah.
The most important number is what amount of money did I put down to buy that house? Mm-hmm. Because let's do a simple math problem.
Okay.
If I bought a $300,000 house and I put down $60,000 or 20%, and now I can sell it for $309,000.
Yep.
I've made $9,000 on $60,000,
right.
Not $9,000 on $300,000.
That's right.
9 is a 15% return on investment.
Yeah.
And that piece, I think people miss.
They do. And how's your savings account right now earning?
Exactly.
Exactly.
You think about that, and then we've talked many times about the non-monetized value of home ownership, memories and experience and things like that.
Yeah.
I read something today, and I think about this. 2 stats that are, as we like to say, for every challenge there's unique opportunities. 2 stats. Number 1, the percentage of first-time home buyers at or near an all-time low last year of about 21%. The average age crept over 40 years old. So think about this. I buy my first house today at 40 years old. What did I lose? What was my opportunity cost, Tony?
Right. That's right.
If I had bought it at 30?
Yeah.
Just, you can do the math over the last 6 years. So again, Tony mentioned 7 years out of 84. And 4 of those years were during the financial crisis. So it's really 3 out of.
Yeah, right.
And so 1 to 2, 2 to 4, 3 to 6% appreciation is an invaluable investment. And we believe here at Howard Hanna that generational wealth continues to be built through home ownership or investment real estate.
That's right.
And the ability, the American dream remains high. And why do we know that? Because home ownership percentage remains in the 63 to 64%.
Yeah.
So a ton of people. Now, obviously, population is growing, et cetera, et cetera. Let's talk a little bit, Tony. I want to talk about, you talked about list pace, you talked about sales pace. There's also another stat that you like to look at, and it's list to sale price. And back in the day, it was 101%, 102% because we were getting multiple offers over asking. That number will always shift. And so tell us what's happening there as it relates to here's my list price, here's my sale price. What's that percentage in relationship?
It's the same trend as everything. It's slowly moving. So it's moved back down to what I think is very healthy, normal, to around right at 98%. Now, I stress this is with no price reduction. So you should be able to get, if you price it right to begin with in the condition, you should get around 98% of the value that you put the house on the market for. Now, if you miss the mark and you start price reductions, it starts moving. So it gets down to about 96% now if you reduce it just one time. And so you got to hit it right. Now, in our mountain areas, our second home markets, probably a little bit bigger. It's probably 95 to 96% with no price reductions. Probably dip into that 93, 94% with one price reduction. Again, very normal, very healthy. So you want to make sure you hit the ground right in the beginning. But there is a little bit of negotiations happening right now. And that 98%, what we don't see is just a list price to close price, but we're also seeing a lot of concessions starting to be offered in the market, which is really important. Kind of follows that conversation you said about I'm a 40-year-old first-time home buyer. Well, your Howard Hanna, Alan Tate, Howard Hanna, Beverly-Hanks could really advise you probably make a really good offer, that 98, 99%, but maybe let's get some concessions. Let's help you get into the home. And you got really two things you need to think about. One is your down payment. The other is your closing costs, and maybe a third, which is your mortgage rate. Well, a lot of concessions that we're seeing in the market in this last 6 months have been really around buying your rate down to get a better rate, which is a better monthly mortgage payment. Suddenly, housing affordability may be better than you think it is. And so I would lean into that kind of coaching right now because the markets are clearly showing a lot more of that right now.
Hey, Tony, one of my favorite headlines that I've shared multiple times, and it really speaks to the importance of you and I and our team educating today's consumer.
Yeah.
And the stat that I've shared, which to me is mind-boggling, Americans on Black Friday spent $12 billion. Now, I believe the majority of those purchases were probably made on a credit card.
Yep.
That I'm not going to make assumptions that weren't paid off, but I'm going to make some assumptions that they weren't all paid off.
Right.
Interest rate on a credit card is somewhere 18 to 21 to whatever.
Could be higher.
And so I think about the following.
Yeah.
We are concerned about a 6 3/8 or 6.5 interest rate. And I went and spent $12 billion. And this headline was great. It said, we don't have a housing challenge. We have an education and priority challenge.
Right.
And I just want us to think about, where we as consumers might be investing / spending. And again, home ownership, it's a part of the American dream that has not changed.
Yeah.
And so I think that's just a perspective that I find fascinating. So let's segue right into interest rates. Where are interest rates today?
Well, let me ride your comment real quick. I will tell you, I grew up in a family business who was in the building business. So my father and my mother would always coach me about what's good debt and what's bad debt. And they always drilled into me, you keep your credit cards zero, but get a house, get a mortgage. That's good debt. And think about the good debt. It earns, like you were talking about. It's a tax, some kind of tax benefit for you with property tax, with your income tax, and then it's gaining percentage. Your credit card does the opposite.
You're right,
the
right.
Credit card hurts you, dings your credit report, et cetera, et cetera. It's always stuck with me about good debt versus bad debt.
Yeah.
But speaking of debt, how about mortgage rates? Mortgage rates, I will tell our audience, I was interviewed by a recent reporter on February 27th. And the mortgage rates that week, we were quoting 5.875. The reporter asked me, do you think rates are going to go lower? And I said, well, I think this around 6, just under 6, should stay pretty steady unless something happens in the world. 24 hours later, we invade Iran. So sorry I said that out loud, guys, but I will tell you, we've seen a couple things happen. The world event did move it. And when it moved a bunch of things, quite frankly, and y'all have felt it at the gas pump, you felt it everywhere. But mortgage rates went way up. And when I say way up, 6.5. Now, I won't really think about this comment I just made, way up. 6.5 is still the lowest rate since 2022. And so let's think about this. For the last 4 years, they've been higher than 6.5. So we had a bump, and guess what happened this last 2 weeks? They've come back down. They've come down to about 6.25, 6.3. Guess what? Lower than 4 years ago. So we're starting to, and we talked about, we thought 6% might be the rate. 6% historically, and you can talk about this too, is really a very healthy number. Could it get below 6? Most people I'm reading saying we're probably going to be in right around 6 this year. It is a very healthy rate right now for us. And that's why that the agent, our Howard Hanna, Alan Tate, Howard Hanna, beverly-hanks can coach you on that, because those concessions, maybe you can buy that rate down with some concessions. Make a clean offer. The seller, what seller wouldn't want to help a 40-year-old if they got a good clean offer? But maybe I could buy that rate into the 5s, really can make a difference. But I think the rates has normalized for a while for us.
So I think two things. Number one, as the buyer, you could always ask for a concession to buy the rate down. As a seller, you know, Tony and I have talked about this, 6.25. I'm going to proactively, as a seller, buy it down to 5.9.
Yeah.
So now I'm marketing, you can buy my home at 5.9 because I'm investing instead of a concession.
That's right.
And now all of a sudden I've got an edge. It's a strategy. I'm not saying it's the greatest. I'm not saying it's not. So that's an option. And I think, you know, creativity today is going to win the day.
That's right.
And education and knowledge. So I think, and then the other piece that you mentioned earlier, which I think is really important, is, you know, when you think about interest rates, and everything is about a where we've been, and we think about, you know, June of 2022 was when interest rates went over 8%, inflation went to 9.1.
Yeah.
And over the last 30 years, the average 30-year interest rate is 7.92%. Today we're at 6 3/8. I sold real estate from 1986 to 1989. I've gone back to see two things: existing home sales and interest rate. So when I was actively selling, the average interest rate was 10.21.
Yeah.
And I sold a lot of houses at 10.21.
Yeah.
Both of us grew up in the real estate business. Obviously, the Hannas and the Tates and the Hankses grew up in the real estate business. 81 and 82, 15, 16, 17%. And guess what happened? Homes sold.
That's correct.
Because people need a roof over their head.
And the advice to our folks out there is, when it's time in your life, do it, buy it, sell it, whatever the case may be. It is the hardest thing to do in our lifetime is time a rate. And I've tried it. It doesn't work. I've tried to no, it's going to go lower, and it doesn't go lower, and then went back up. I lost some refinance one time doing that. You just need to do it when it's right. But to your point, when I was selling, it was around 9 to 10%. 9 was the average. And when it dropped to 8, everybody went crazy because they go, oh, 8's a great deal. Let's do it. We all get, what's the word? We get normalized for whatever the rate is. It's kind of like gas. I noticed today gas prices dropped 35%. I got excited. And I thought, wait a minute, gas prices are still high. But you get excited by it because I needed to buy gas. So you do it when it's right for you.
I always joke, my first house, it was 9 7/8.
Wow.
And because it was under 10, I literally thought I won the lottery.
Yeah.
Like, just think about that as a perspective. Yeah. And yet, in 2020, I bought a house at 2.5%. And I think every year we get away from 20 and 21, we're reminded that that was the outlier.
That's right.
We're living in the normal. So one of the things that makes us built different, we've talked about our mortgage company, Howard Hanna Mortgage. We haven't spent enough time, I think, on a couple of, we call them essential services. We call them essential services because they're essential to the transaction. While not everybody has to have a mortgage, and there are some people that buy cash, particularly at certain price points more and more, we all need title insurance. And we've got barrister's title, master title, and cardinal title. So we've got representation in the title business, but homeowners insurance. And I wanted to come to an article I read today.
Okay.
We talk often, Tony, about how important it is for our agents and our trusted advisors to do what we call real estate reviews with their sphere of influence.
That's right.
You know, the average consumer buys a house and doesn't do it again for 9 to 11 years. but we owe them, I think we owe them, you think we owe them, every year, every other year, to make sure we go out and do a real estate review, a pricing, a conditioning, kind of our own assessment.
That's right.
And we also recommend an insurance physical, if you will, an insurance review. So I read this today, and I think it's really important. 1 in 7 homes does not have homeowners insurance, as premiums have skyrocketed. In our meeting today, Tony, we talked about the rising of premiums. I don't think not having insurance is your option.
That's correct.
And so I'm gonna put on a little infomercial. I think everyone needs to have an insurance review, because if I bought a house in 18, 19, 20, 21, and I haven't changed the replacement, my home is up 40, 50, 60%.
Correct.
And so, again, built different, brokerage, mortgage, title, insurance, and now we're excited to offer property management here in the Carolinas for the first time. Really excited about that, and obviously the relocation business. So anyway, I saw that today, and I think not having it, being the 1 out of 7, is not an option.
Yeah.
I think it's about getting with particularly our insurance company and shopping insurance. And as Tony said earlier, it might mean on my home I'm going to have a higher deductible to get my price down. These are choices we make. Don't go uninsured.
Well, and then the beauty of the Howard Hanna Insurance is we do shop many, many vendors or contracts that we have with insurance companies. And to your point, if you look at it at least once a year, make sure you're protected, make sure that value you have, the house value, that you're protected. But there's this thing now with deductibles that's really important to shop, because maybe you can get a return back on your insurance premium that increased by changing that deductible when it's not that much more cash out of pocket if you had an emergency. And it suddenly makes more sense monthly, but you need somebody really to coach you, consult with you, and look at you. And our Howard Insurance does that for all our clients at least once a year.
Yeah, that's great. So I think, one of the important things is, there's a lot of competition in our space.
Yep.
And, I think it's critical that we help everyone understand, why we do believe that we're built different. And there's a lot of layers to that. One of them is local expertise and local leadership.
Yep.
Tony, as many of you know, runs our Triad in the High Countries, lived there, been in the business 38, 39 years. He obviously is a little younger than I, because he got an 8% interest rate and I got a 10% interest rate. But again, both growing up in the family, and there's a number of multi-generational folks we have in our company who grew up in it, understood it, lived through the 80s, lived through the recession of 1991. And again, I think it just speaks volumes to the strength and stability of our company. And, we're certainly proud being the #1 family-owned and operated real estate company in the country. But I think what we're most proud of is what that truly represents is we think we represent the best experience for the consumer.
Yeah,
and I think that when we keep the consumer at the center of what we do, which we do and have done, as Tony said, next April we will celebrate 70 years, which is incredible.
I think the full service would be what I'd add to that.
For sure.
Where the client, we just about take care of everything. And we have options for our clients to insurance, mortgage, title, the real estate transaction, selling, buying, and as you said, property management is coming. So we just about can do everything. And there's a lot of clients who come to us for that purpose. They just want us to take care of everything for them. Yeah. And that makes us very proud of what we do. Yeah.
So I think a couple things. Let's kind of tie a bow around today. It's been great. Love the video capability. Love our studio. I do want to touch on the other book. I stole Built to Last because I wanted to lean into Built Different. And the other one is called The Science of Scaling. And the Science of Scaling is really relevant for all of us. And it's really about, the concept of let's all do less things better. Let's not complicate the world we live in, whether I'm buying or selling. And when we think about simplification versus complication, one-stop shopping with choices, full service, simplifies the real estate transaction really to the highest degree. And one of the things that we've been seeing recently is competitors who never thought about mortgage, title, and insurance are claiming to be a disruptor in our business because they're getting into it, and we've been in these businesses since the late 70s, early 80s. So I would suggest that we've been the disruptor of our business for certainly the better part of 50 years. So close up with a couple things. I'm a seller today, or I'm considering selling today. Why does Tony Jarrett say to me, Gary, here is why I think today is a great time to sell your home?
Well, one is most of our sellers have a tremendous amount of equity. So why not leverage that equity? Now, a lot of people tell me, well, I like to pay my mortgage off. That may not be the best financial decision, especially depending on your career, your taxes. Now, it might be right if you're retiring, but maybe it's time to leverage that equity and roll it into something else and reinvest that money. Maybe downsize your life, maybe go to the beach, maybe go to the mountains, whatever it may be, but it's always a good time right now because you do have more options to look. I will tell you, one of the things I'm seeing in the market, and especially in the sweet spots, if you were to go find something that meets your price, meets the condition, that's a lot of people want turnkey right now. The turnkey properties are the ones moving faster. So if you have a house to sell and you turn around and go buy something, don't come to the market with a contingency, because that's when you're going to lose that offer. And by the way, that house is in good condition, good price, somebody else is interested. It's fascinating. We have this program called Buy Before You Sell. And so we do have some financial products that could help you as a seller sitting there, that maybe we could help you finance that equity for a very short term to use that cash to go buy that house with no strings, no contingency. Your offer just got better. You won. Your life is simple. The stress is gone. Just roll it in there. And that's something that you should talk to us about. Buy before you sell, because now you become very good. And who knows, you might even get better terms because you don't have all these other contingencies or whatever, and get what you want.
Excellent. I think about buy before you sell, and I think about innovation. You know, one of our 6 pillars that have been around for really the start of our company is innovation. And one of the things we like to say is, you know, we got this great combination of the richness and tradition of the past with clarity and vision of the future with innovation. We have a money back guarantee. And I just think about that often. And basically it says, if I buy a house from Howard Hanna and something happens and I need to move, I want to move, I choose to move, I have a life experience, that we will buy the house back. Right. And what's interesting, Tony, is it doesn't happen often, but it is the ultimate insurance policy peace of mind. Yeah. Speaking of that, the other thing that has really happened in our industry from COVID, when it was crazy, is home warranties really were really popular and significant. They became less because of no contingencies. And I would just encourage, if I'm a seller, I want to unearth every single benefit. And now I personally, and we've had this conversation, I would recommend a pre-inspection and a home warranty. And now all of a sudden, to Tony's point, today's buyer wants convenience, speed, and certainty. And so as we sell, as we list our home, think about that. And most of the warranties certainly cover you during the listing term, not just the year after. And then as a buyer, renew it. I historically renew them. I don't always. And inevitably, when I don't, my dishwasher goes bad. And when I do, everything's fine. But that's the beauty of an insurance policy. I would be remiss not to talk about one final topic. Okay. Big in the world, AI. Yeah. And everybody is now asking, tell us about AI and the real estate industry. I think some companies out there have their listings on X, Y, or Z. And so we've spent some time recently, and again, you may have watched the recent podcast with Ryder Harris, who was amazing. But my favorite statement is, AI is not going to replace people. AI is going to replace people who don't use AI, if that makes sense. Yeah. So your perspective, you're a tech guy, you're out there. What are you saying, both from a realtor's perspective, but equally important, the consumer? What is the buyer and seller today using AI for, so that then when they get to you and I and one of our teammates, they're even more prepared than they've been over the past decade?
Yeah, and I'll give you two thoughts. One thought is artificial intelligence is a really good thing, in my opinion, for speed and efficiency. I need a question answered. I want to know something. I'm curious. I think you can get some pretty decent answers pretty fast, especially around marketing, writing things, etc. Where I'm concerned about AI is it's trying to make decisions for our clients. And I'll give you an example. We've had this happen 3 times recently, where we have a buyer who has a home inspection. We've bought the home, we have the home inspection, and I'm going to use my paper here. The home inspector says, here's my report, and gives it to the buyer. The buyer takes this home inspection and uploads it into ChatGPT or Gemini or whatever and says, what do you think? And ChatGPT pops out, you shouldn't buy this house. That is very concerning to me that a decision of that magnitude is made that fast and made by a computer, where my advice to our clients is, I need to be your AI. I, the realtor, who know the market, who know the house. ChatGPT cannot walk through that house. ChatGPT cannot understand that may be a quick fix for a long-term, like we talked about, a gain, that this might be the best place to raise my kids. ChatGPT cannot answer that. So we're starting to see some weirdness, if you will, of some decision making that is starting to impact. And you said it best, it will not replace people, and it will. A lot of people think about the pandemic. During the pandemic, we had people buying houses sight unseen. Some of those were not good experiences. And then they saw the house and go, oh, this is not what I thought it was from the photos. Well, let me tell you what artificial intelligence does to photos. It can really do some false advertising. I think we're actually going to see some new laws around this in the state because of false advertising around that. You really need to be in the house. You need to go see it. You need a consultant like one of us to be there to hold your hand, to give you that full service experience. We're your artificial intelligence, but I wouldn't call us artificial. I would say we're the real intelligence when it comes to buying or selling a property. So don't go too deep into this, replacing it, because it needs context, it needs perspective, and it can't give you some of those things.
So anecdotally, think about this. Probably 10, 12, 15 years ago, we could begin to go online to a website or two, put in my address, and it give me a value. Called it an AVM, right?
That's right.
So today, I do it every 6 months.
Yep.
And I pick 3 of them. They're all different.
Yeah.
They're all different.
That's right.
And some significantly different. So I, as a consumer, say, well, I'm going to take this one, and that's my list price, when this one might be more, like, some make you happy and some make you sad, right?
That's right.
So I think this is exactly the same. And we talked about this, Tony. AI is here to stay. Again, if we can utilize it, leverage it to make us better, prepared, more knowledgeable, we're going to win the day. I love AI as authentic interactions, which is people doing business with people, and it's agent intelligence, which is exactly what you just said. And so I think the following. Last year, 91% of every seller used a real estate agent.
Yeah.
At a time when information is so accessible, I will make a prediction that I think more consumers will use agents next year and the year after.
Agreed.
Even with AI, because they're going to need us, to your point, to walk them through and interpret the artificial intelligence.
Yeah.
And so when I interviewed Ryder, his favorite quote was, no one uses AI more than I do, and no one questions it more than I do.
There you go.
There are story after story after story about information generated by AI that is false. So it's here to stay. We have capabilities within our company to utilize it in ways that are beneficial, more effective, more efficient.
Yep.
And we know the consumer is going to be using it, and we know you're going to come in equipped with some information.
Yep.
And the real estate trusted advisor needs to be prepared. So I just want to say thanks to Tony Jarrett. It is, as always, great to have him. Tony always says to me, why don't you have some other regional vice presidents on? And the answer is every one of them is more than capable. They will be a guest of Reality Podcast talking about something else. We have grown to love this quarterly update. We continue to be cautiously bullish on 2026. We think it's a great time to buy. We think it's a great time to sell. It is the most important time to be educated.
That's right.
And to be knowledgeable and to ask a lot of questions. and to reach out to your Howard Hanna agent.
That's right.
That would be my last recommendation. Tony, thanks for joining us.
Thanks for having me as always. Thank you for joining us today, and I hope everybody has a wonderful spring season this second quarter of April, May, and June. I think for a lot of people it's the favorite time of year, and for real estate it's usually some of the best opportunities out there. So hope we'll see you out there in the field.
Let's go. Hey, big open house weekend, I think, kicked off the spring market.
That's right.
A little later than we like. It's going to last a little longer.
And we've got twilight open houses coming soon.
Let's go.
Yeah, and that's going to be really cool where you can come out and see some houses at twilight, at the evenings. And those will be advertised on our website, our social media. Please come out and visit us. That'll be starting in May and June. And then many of our local markets have Parade of Homes coming up, which I know we have a lot of builders in there. So come out and see some new homes as well. Just reach out to your Howard Hanna Allen Tate or your Howard Hanna Beverly-Hanks, and we'll give you those information in your local market.
Awesome. TJ, thanks.
Thanks
for joining us.
Thank you.